Hello everybody, welcome back to my channel, Trading Secrets. Channel is for entertainment purposes only, so for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. So through this channel I would like to bring you some stock analysis and also a short 5-minute trading lesson at the end, so please stay tuned. Okay, quick recap on previous day's trading, which I think we can all agree was a lot more positive. There were some excellent returns and recovery from many of the stocks that we have invested in, and some of them, especially the ones that I brought you. So let's have a quick look through some of those. So we had Mara up in excess of 16%, ticker symbol MARA. We had American Battery Metals at ticker symbol ABML, that was up in excess of 11%. Ticker symbol ZOM, Zomedica, that was up in excess of 8%. One that I think I'm quite bullish on is ticker symbol SENS. That one was up in excess of 14%. So make sure you keep your eye on that one. Some very positive news coming up very soon for Senseonics. Ticker symbol BNGO. Up in excess of 9%. This was a good buying opportunity for anybody who didn't have this to buy into some of these stocks as well. I think one of the best performers was ticker symbol AQMS, which I also brought to you earlier, and that was well up in excess of 17%. And one of the new stocks that I introduced to you in the previous video was Royal Caribbean, and that one was up in excess of 7%, which is a cruise company, and I think the outlook for that is going to be much more positive, especially in the summer of 2021, where I see lots of recovery post-pandemic, fingers crossed. So before the stock analysis, I'd like to do a little bit of an update on ticker symbol CCIV. This is a stock that's been drawing lots of attention, lots of investment, and people looking in and making lots of money as well. So initially this stock was trading around $10. Then there was a rumor released by Bloomberg. It spiked up well in excess of $15. So the people who initially invested did get good returns, and even to the present day, they would still be in profit. However, what happened is obviously we saw a sustained movement up for this share price. It touched and hovered around $30, $29, and then at one time we saw a spike well up in excess of $64. So what was the reason, and why has the share price come tumbling down previous days trading to just over $28? So it's kind of 50% decline from the $64. So this is something I think has happened for a number of reasons. So I'm just going to try and explain these. Let's refer, please, first of all, to this article on Seeking Alpha. We can see here that CCIV agreed to pay $11.75 billion for Lucid's existing business. So this was the blank check company. So the $2.1 billion in cash and another $2.5 billion in cash from institutional investors, giving an post-equity deal of $16.3 billion. So the company cited a valuation of $24 billion. So let's just remember that figure, $24 million. So because the institutional investors agreed to buy into CCIV at $15 a share, which is a 15% premium to its net asset value, they came up with an entire equity and roughly valuation of $24 billion. So just ignore all what I've said there. What I'm going to do now is try to explain that in simple terms. So let me try and explain that in kind of a bit more simple language. So initially we as investors were told that the valuation was $12 billion or $15 billion. So this gives us a good, healthy premium on our share price, because we, as investors, always want to invest in a company that is undervalued. That gives us more chance of growth and more return on our investment. So Bloomberg were responsible for releasing this valuation initially. As we can see, what's happened now is on February the 24th, and the day after the merger was confirmed, and after post-merger, we had a news release saying the valuation was now 24 billion. So what this has led to is an instant spike downwards in the share price, because we are not getting a bargain as previously thought, in terms of, it's going to zoom up to $100, which is what nearly all investors and analysts thought. So let's put our conspiracy head on now. So the conspiracy head is the insiders were thinking, well, hold on, we can get more money now. So let's renegotiate. And we can see here that that's happened. There's a 50% premium there. And let's renegotiate. Let's get more money. And so the insiders did benefit, but the retail investors like ourselves were only told about this 24 billion after. So that's the conspiracy side of things, because Bloomberg did not release this $24 billion valuation before confirmation of merger. They only released a valuation of $12 billion. So not good for investors like ourselves. Lots of people who bought in well over $40, $50, $60 even, they will have suffered some tremendous losses. So not good for the retail investor. Still good for people who got in early, but we have to see this as a lesson to be learned. So the lesson to be learned is always cash in profits and always expect the unexpected, especially when you're dealing with the market. Okay, so today's stock analysis is for ticker symbol LKCO Luokung Technology. So why did I choose to invest in this business? So I was aware of this business for quite a while. However, I did not choose to invest. So yesterday in previous days trading, I did feel it was the right time to make a move on this investment. So I invested at an average price of $2.06. It closed up in excess of 9% at $2.09. So why did I choose to invest in Luokung Technology? So let's start by first of all have a look at their website. Okay, so having a look at their website, we can see that Luokung Technology is one of the world's leading data technology service companies. It's a leading location interactive travel service company. It's based in China. The core business brands are Luokung, Super Engine, etc. They have patented technologies, so obviously that's good for an investor because we know they are legally protected in terms of their innovative ideas and products. The company's independent research and development industries focus on things like mobile internet. They also look at internet travel, intelligent transportation, autonomous driving. Again, very, very good going forward. So lots of very, very interesting aspects to their business, such as we've got obviously autonomous driving, we have smart cities, intelligent internet of things, natural resource exploration, monitoring. They're also looking at spatial temporal big data, PASS, SaaS, DaaS, intelligent services, but not limited to satellite and drone technology, remote sensor data imaging. So HD maps, internet two-dimensional and three-dimensional application maps, real-time trajectory, IoT industrial streams data, and spatial temporal data intelligence, integrated computing and application services. So very, very forward-looking company, very high tech, something that is going to have huge, huge potential going forward in terms of growth. So fantastic business in terms of what they do. It does come with some risks. It is a penny stock, but let's look at this a little bit deeper and let's look at the risk and let's look at the potential rewards. Okay, so let's start by looking at a very recent news article for this company from FinTech Zoom, dated February the 24th. So the headline here is Penny Stocks, why is Luokung Technology up in excess of 112% from the day one this year? So let's delve a little bit deeper into this in terms of the history of the share price. It's had a very favorable run when it comes to the market performance. The 1 year high for this stock was in excess of $3. Well, it was actually $3.86, which was on the 16th of February. The lowest valuation for the year was 58 cents. So big variation in price. That's one of the reasons why I did choose to invest on the previous day just at over $2, because it's never a good idea to invest at the high of the price. It's always a good idea to invest on the dip. So investing anywhere in excess of $3 and certainly $3.86 is always a recipe for disaster. So let's see what else we can see in terms of this news article. Okay, so the other aspect of this article that I'd like to share with you, which is the important aspect of news for this company, is in terms of volume. So we can see in this article that the company has experienced tremendous volume in trading. So that's certainly true. We can also see that they have announced that they have had record performance in the market, was 216%. The revenues have increased by in excess of 414% on a quarterly basis in comparison with the previous year. So the company has a valuation as at time of the article of in excess of $715 million, and it has 182 workers. So what this tells us is the company is growing fast, the company is well established, the company does not have a tremendously high valuation. So $710 million is not a huge valuation. So what that means for investors is there is lots and lots of scope for growth, but there are some risks. So I'm going to have a look at the risks for this stock now. Okay, so in order to look at the risk associated with invested in this stock, we're going to look at an article from PR Newswire. This article is dated January the 15th, and we can see here that the risk is basically Luokung has announced statement on being included in the relevant list by the US Department of Defense. So basically this is something going back to the Trump days and what we saw back in the President Trump's days of office, that this was a company that was listed on a Department of Defense list. So that means this company is at risk of possibly being delisted. However, there has been a change in government. We now have the Biden government, and there is now a kind of a situation that this company does have time to make some changes. The company is listed on the NASDAQ. Also, although it's not a penny, although it is a penny stock, it's not listed on the OTC. So that's a good aspect of this business, because by being listed on the NASDAQ, it does go through more rigorous accounting. There has a lot more auditing, and there's a lot more rules to be followed. So let's have a look at this news article in a bit more detail. So in response to being put on the list, the company has now released a statement saying, first of all, they are not a state-owned enterprise, so they're not involved with any ownership from the government's Chinese government's point of view. So they believe they are compliant. They believe they are complying with the relevant laws and regulations completely. So they also have said that they confirm they are not controlled, owned, or affiliated by the Chinese military or any military company. So obviously they are quite confident there. So the company is fully assessing the impact of this situation and responding accordingly in terms of communicating with all the parties. So the company has also said they are going to abide by all the relevant rules in a timely manner, perform all the information disclosed based on the development of the subsequent events. Investors, like ourselves, are kindly requested to pay attention to the company's announcement and beware of the investment risks. Okay, so let's have a quick analysis of this. Okay, so basically what this means, the risk is the company could be delisted. In theory, that is certainly possible, and it's not been removed from the list as of yet. However, when dealing with a stock and dealing with a trade, we can see that obviously there are some situations that have gone in favor of this stock, and that is, first of all, change of government. Another thing that's gone in favor of this stock is they are making as much efforts as possible to comply with the accounting standards and comply with all the requirements. And the other benefit that we have in terms of investors is once they are delisted and removed from this list, there is going to be a significant positive spike upwards in the share price. So it's a good time to invest if you are happy to consider this risk. Yeah, so the risk is continuation of delisting. The reward is significant return on your investment. So we could say the analogy is similar to CCIV. Is there going to be a merger? Is there not going to be a merger? If there is going to be a merger, we expect a return. So basically, similar situation here. However, I do not think there will be a kind of a same situation in terms of the valuation, because obviously this is not going through a merger, this is just going through delisting. So we're not going to have that valuation problem that we had with CCIV. What we're going to have is more opportunity for the business to grow, more opportunity for the business to kind of gain its market share, and also as customers and businesses and investors to benefit from all the technology that this company has, because some of the technology they have is very, very innovative, very, very forward looking, and it's going to make some tremendous movements in the markets. Another reason why I chose to invest in this stock is by looking at the institutional investors. So we can see here who are the institutional investors, when did they buy their shares, and how much shares have they invested and currently own. So the reason for looking at this is this gives us more confidence. This gives us more certainty in terms of confidence from not only individual investors but also institutions, because institutions will probably carry out more in specific research, they will have more in-depth knowledge, and they will have more experts looking at the ins and outs of everything. So who are these institutional investors? We can see here some of them are very big and well recognized. We have Citadel Advisors, we have JP Morgan and Chase, we have the Focus Wealth Management Incorporation, we have Geode Capital Management. So some big names here, including Renaissance Technology. So that's something that gives me as an investor confidence as well. So now let's move over to look at the chart. Okay, so this is the chart for ticker symbol LKCO, Luokung Technology Corporation. So we can see here it's been trading steadily around about just under $1, 80 cents, 50 cents, 40 cents, all the way up to February. And then we can see from February the 7th, there has been some interest, there's been some spike. And then February the 13th, February the 14th, we can see almost a 90-degree line up. So this is the point where the returns are maximized. People will either cash in. The danger here is when you get to the top. So as I told you before, they did reach at one point a high of $3.58. This is always a very, very risky time to invest at this almost 90-degree vertical line going up. And this is one of the reasons why I didn't choose to invest, because investing at $3 or $3.58, I was aware that one analyst was kind of recommending a buy price of $2.59, which I didn't agree with. So I think we can see there, as soon as it reached the peak of $3.58, there was a very, very significant fall downwards. There was a little bit of consolidation around about the 15th of February, and then a movement down again. And right now I chose to invest right now just at the curve. So if you can see the curve at previous stage trading just over $2. So I can see now, I think it's a good time to invest in terms of the price is not going up vertically 90 degrees, and it's not in danger of vertically going down. So I think we have consolidated. That kind of erratic behavior has finished. So it's looking at something that I prefer as an investor to see more sustained, more gradual growth, however more positive growth. So going forward, I think this is something that you can certainly put on your watch list as a penny stock with a good chance of risk, but with lots of reward as well. So going forward, in terms of a strike price, consider any strike price for this around $2, or if you can catch this just below $2, I think this would be a good investment. And again, with this particular stock, it would also be a good idea to split your investment into three sections. So if you have, let's say, $600 or $300, divide that up into three, and then that way, if the share price goes down, you can average down, and you can also buy the dip, and if it goes up, you benefit from the gain, but you do not lose all your money as well. So it's a penny stock. It is listed on the NASDAQ, which is good in terms of control and regulation. So going forward, I do expect this to reach in excess of $4 in the medium term. So good potential for a return here. I am bullish about this stock. The company has a fantastic platform of products and ideas and innovative technologies. So put this on your watch list. And due to the extended analysis today, the next trading lesson will be tomorrow. Thank you very much for watching, and stay tuned.